back to our new uploaded video. It's me again, Chris Jane Biliaza, and in this video, we're gonna talk about the initial public offer known as IPO and the follow-on public offer or mas kilala sa tawag na FPO. Without further ado, let's get started! IPO is an abbreviation of initial public offer. When a company is going for a process of getting listed in a stock exchange and a public traded, the IPO is the first public offering that is the main source of the company and acquiring money from the general public to finance its project, and the company allots shares to the investors in return. When we talk about FPO, it is an abbreviation for follow-on public offer. And of course, it is a process of FPO that onset after an IPO. FPO is a public issue of shares to investors in a large publicly listed company. Therefore, an FPO, the company goes for a further issue of the shares to the general public with a view to diversify its equity base. So therefore, it is prospectus offered by the company.
The key difference of IPOs and FPOs.
IPO refers to an offer of securities that made to the public for a subscription by the company for the first time, while the FPO refers to an offer of securities for the subscription to the public by a publicly traded enterprises.
How about the issuer of IPO and FPO?
When we say unlisted company,
you can invest in a private company even before its initial public offer by buying in unlisted shares. One of the main reasons investors buy these shares is for the expected gains. Companies sell these shares at a discounted price to tempt investors to buy a significant stake of their unlisted shares.
Whereby the listed companies is
Follow-on public offer or FPO is a way by which companies already listed on the stock exchange issue shares to the public. It is different from an IPO, which is when a company offers its shares to the public for the first time.
So through the first time from the public in terms of raising capital, it means the IPO.
Through an initial public offering, a company raises capital by issuing shares of stock or equity in a public market. Generally, an IPO is a company's first issue of stock, but there are ways of a company can go public more than once. The IPO process is the locomotive of capitalism.
A subsequent public contribution, it means that the raising capital of this FPO is
An FPO is one strategy a public company can use to raise capital, but it's not the only one. Another way companies can raise additional capital is through borrowing, either borrowing from a bank or by issuing bonds. Borrowing has some pros and cons compared to issuing new shares.
Thus, the main objective of this IPO is to raise capital through a public investment, while the FPO is to subsequent public investment. In terms of predictability, the IPO is less predictable, while the FPO is more predictable. In terms of profit, the IPO is higher than the FPO, while the FPO is lower than IPO. It's because
IPO can give higher returns for investors and turns out to be a profitable one than FPOs because investors take part in the starting growth of the company. FPOs tends to have the less risk than IPO since all the information has been available to the investors about the company.
So the types of this IPO is the equity shares and the preferred shares, while the types of FPO is the dilutive offering and the non-dilutive offering. So that is the distinctions between the initial public offering and the follow-on public offering or mas kilala sa tinatawag nating IPO and FPO. I hope you learned something guys for this video. Thank you so much for watching. God bless us all. Bye-bye!